What happens if you total your car and the insurance company settlement is not enough to cover the loan for your vehicle? You pay out of pocket is what happens, and this can be thousands of dollars. In this video, I explain what optional coverage you can carry to cover this gap in coverage. First, don't forget to subscribe below for more insurance and money-saving tips. This add-on option is called gap coverage. It covers the difference between the loan on your vehicle and the actual cash value settlement that the insurance company pays you for your total loss. You see, your vehicle is covered on an actual cash value basis. This means that the insurance company depreciates the value of your car based on variables like age, wear and tear, mileage. Even if your car is brand new, it's estimated that the second that you drive it off the lot, the insurance company will depreciate your vehicle by $2,500. By adding this gap coverage to your insurance policy, you would be covered for this potential risk. Anyone with a brand new car or a loan on a used car should be carrying this add-on coverage. The cost for this additional coverage is usually about $40 for 6 months, and you can remove it when you feel that it's no longer needed. Now, you can also typically add this to the loan through your bank. Now, if your bank doesn't offer this coverage, or maybe it's just too expensive to add on to your loan, you should definitely add this to your car insurance policy. Again, gap in coverage will cover the difference between the loan that you have on your vehicle and the settlement that you receive from the insurance company should there be a total loss. Don't forget to like and subscribe to our channel for more great insurance content. Thank you very much for watching, and we'll see you next time.